Welcome to the Properties to Profit podcast. I'm Michael, your host. Excited to share with you my journey from a six-figure job to building a successful real estate business. Each episode will explore various aspects of real estate investing, from wholesaling and flipping to managing rentals. I'll share the lessons and insights I've gained, aiming to help you avoid mistakes and achieve your financial goals. Expect guest experts, valuable tips, and practical advice to guide you on your own real estate journey. Thank you for tuning in. If you find any value in this podcast, please subscribe, share, and follow me on social media. Let's turn properties into profits together.
Hey guys, Michael here with Properties to Profits. And today we're going to talk about what I believe is going to happen in 2026. I believe 26 is going to reward the prepared investors and punish the emotional ones. I believe interest rates are likely to go down, unemployment's rising, money supply is growing, and real estate investors who understand all of this will win. I think most people are going to react after the shift, right? Wealth is built before the headlines confirm it, and we're going to talk about that today. I've found most investors are really stuck between two traps. They're paralyzed. They always think things are going to get better and that they're going to wait for tomorrow and next week. Rates will drop, prices will come down, whatever that is. Or recency biases. They're assuming that the real estate market that's been pretty tough, pretty flatlined, and some markets down significantly, is going to last forever. People don't understand what happens when our government prints money, interest rates come down, and unemployment goes up. All of those things affect housing and just hard assets in general. They think real estate crashes come from housing, not from credit and liquidity. Real estate housing issues come from lack of credit and lack of liquidity. Government is fixing that issue. Now, it doesn't fix everything right away, but you will see there will be an uptick. And so 2026 is likely going to create an opportunity with interest rates have dropped 3/4 of a point the last, 4 or 5 months, and potentially another 2 rate drops in 26 and another 1 to 2 potentially in 27. What does this mean? Well, as unemployment goes up, it means there's more opportunities for people who need to sell. If they've lost their job, cannot have the same income, they are in a tough spot, need to sell. As capital comes back in, the government is buying up its debt. What does that mean? There's more capital to circulate. Where does that capital typically go? It gets spent, it goes into assets, goes into businesses, and it goes into real estate, even some risky assets such as crypto. You'll also realize competition doesn't like to do things when it's tough. They wait because they think it's going to get easier. They're like, I'm going to know when the bottom is and I'm going to buy right then. That's rarely the case. Because you have to be buying before the right rate cuts get priced in. You have to buy before the masses move in, because once the masses move in, prices go up. You then ride the appreciation fueled by liquidity, not hype. Where's the liquidity come from, you ask for? Government printing. Looks like a lot of different things. Given to the businesses in 2008, 2020, it was given to the people. What's it going to look like in 2025, 6, and 27? I'm not sure. Currently, they're buying their own debt back. That money goes somewhere and allows banks to borrow at the current rates instead of the rates being up higher. When rates come down, people spend more. Feds don't cut rates when things are good. They cut rates when growth slows, unemployment's going up, debt service becomes a problem, and all of those things we're seeing. Whether it's cars, credit cards, housing, everything. People are struggling to make their monthly payments, including our government. They're struggling to make those payments. And they're renewing debt at higher interest rates, and they don't want to do that either. Why I believe rates are going to continue downward. Our government's overlevered, consumers are overlevered, and high rates break the system faster than inflation does. Translation, cheaper money forces inflation. If you have a real asset, prices go up. Buyers return faster, and then sellers don't have to sell for cheap, pennies on the dollar anymore because there's more buyers. Well, if you're the owner who owns the asset who does not need to sell, you have opportunities. You can refi these and then continue to see the upside that will most likely come. The thing that forces things the most is unemployment. And what happens if that continues to go up? 25 will go down as one of the most job lost dating back to 2008. but it creates opportunities. When unemployment happens, unfortunately, people lose their job. When money gets tough, they think about relocating, downsizing. Unfortunately, divorce happens. They miss other payments, credit gets affected, and they need solutions. Unfortunately, they can't list. And we're seeing more and more of that. People who go list and then have to sell. Well, when more inventory goes up, especially the off-market variety, people who need to sell, want to sell quickly, and don't want people to know about it, this doesn't usually mean a housing crash. It just means housing may loosen up a little bit, and that's not a bad thing. We have no lending issues that we know of. Lending requirements are tighter. Now they're trying to loosen those. But housing supply is still structurally tight. We're not at 3 months inventory in most markets, which is considered a balanced market. Many homeowners have equity, and so they can sell their house and put cash in their pocket, a lot of times more cash than they've ever had. So you'll see more deals, but there won't be apocalypse. You won't have endless amounts of deals. You'll still have to work. Well, let's talk about the money supply growing, what that's going to mean. What is the money supply growing, you ask? Well, it's the total money in circulation across all countries. You see, all countries have been printing money the last year or so, and it looks like it's going to continue. And the biggest money printer of them all, US, us, the United States of America, just turned theirs on. So as this goes up, it means your current currency goes down, meaning the dollar is worth less. It takes more dollars to buy your chicken, your eggs, your food, your houses, your cars, whatever you're buying. What this means is typically assets get more expensive. Cash loses its value, and real estate is a big beneficiary of that. Why does this matter, you ask? Liquidity moves towards hard assets. The people with money are going to buy more houses because they know that their dollars are going to be worth less, meaning a dollar today is not worth a dollar tomorrow, next year, or the following year as more money is printed. What does that do? They then push it to things like real estate, businesses, even cryptocurrency. I'm predicting that most of those things will go up over 26. Not saying it'll be a straight line. Don't expect that. Nothing is that easy. Real estate doesn't need perfect conditions. Real estate is a real asset that is built, and all of us need a place to live. This is why I believe real estate's going to do well in 26 and beyond. Now, I always tell people, make sure you can afford the asset. If you can't afford a month or two without running into problems when you buy a house for an investment property, don't do it. Know that the property may or may not cash flow at today's interest rates. Be prepared for that. Be prepared for that. Have cash set aside or only buy cash flowing assets. I would still be prepared for 2, 3, 4 months of vacancy, as I think you'll see those trend up a little bit. Remember, don't wait till rates go down. Once rates go down and they're priced in, it's too late. Just so you know, rates have gone down the last 3 months. Interest rates are actually higher right now. So now's a good time to buy, because once rates actually hit the market 6 to 12 months from now, everyone will be aware of that and everyone will start buying, and you'll see prices go up. If you buy now, you can always refinance later if rates drop significantly. You get the tax efficiencies, all of those things. If you're in the home buying business like I am, now is the time to up your leads. Push marketing higher. When competition pulls back, is your opportunity to grow. Sellers are still going to raise their hands because they're uncertain. They don't know what to do. They need guidance. If you can be that guidance to get them across the finish line, it will go a long way. If you execute this correctly, you'll lower your basis from the last late cycle buyers. You'll have multiple exit options. We hold, flip, wholesale, and then we can always refinance to get more liquidity out. We're currently refinancing older houses that we've owned for 4 or 5 years to bring cash to the table because we believe there's going to be opportunities. You benefit from this money supply because you own hard assets and the values go up. Liquidity expansion means there's going to be more dollars, and more dollars is going to take more dollars to buy the same asset. It's happened over time and substantially the last 30 years. Why does this work? Governments always choose inflation over collapse. Every single one. Especially now in the world we live in. Central banks, the Feds, will choose liquidity over everything falling off a cliff. Real estate is protected by long-term supply constraints, meaning currently we can't build a house quickly enough. Most of us prefer homeownership over renting, and even if we did have to rent, we prefer bigger assets, bigger floor plans, and you can get that in single family homes. Debt-based monetary systems. When you lock in the debt, your payment's fixed. So if the dollars get ruined, you're still okay because you're paying on what it was worth today, not what it's worth tomorrow. History doesn't often repeat, but it rhymes. You're seeing this repeat from 2020, not as fast, 2008, more similar to that, back in the 2000s, and then again in the early 90s. How far do I need to go back? This cycle always repeats itself. Waiting for certainty will be a bad idea. You'll be waiting too long, and then things will be more expensive. What will you do at that point? You'll see the rich will get richer, and you'll be stuck. Now, if you're someone who wants to change your life, if you're an investor, you buy houses, continue buying. Make sure you have cash on hand. Raise money from other investors and grow this thing substantially. High-income professional, don't leave your job. You're probably best suited there than start right now. But learn to partner and invest passively, especially if someone who doesn't do well with stress or risk. Go partner with the right operator who knows what they're doing. They've been through the ups and downs. If they've lasted the last 2 years, they're probably a good partner because the last 2 years in real estate have been really choppy, tough middle grounds that no one likes to be in. Now, if you're someone who just doesn't make enough money and you can't do this, this is where you have an opportunity to grow. Go find a job where you can grow yourself and expand your income, whether that's sales or going back to school, whatever the case might be. You can find deals for people like me. You can pick up a phone, make phone calls. It's not that hard. We'll change your life. You bring it to me and I will execute the money strategy so you don't have to, and then we will make money together. 2026, I don't think it's about timing the bottom. I don't know many people that can do that. It's about being positioned before the crowd realizes it. Now, the bottom still may come in late 26 or even 27. I'm not here to guarantee that. But I will say the people who buy 26 will be satisfied. So the question is, do you want to wait? Or do you want to start buying now and be positioned well for 2020? Or like it was in 2020. If you would have bought real estate in 29 and 2020, you'd be sitting pretty right now. But a lot of us sat thinking there was going to be better opportunities. If you're looking for a new opportunity, we're built for this. We'd love to have a conversation with A players, people who go above and beyond and do what is required no matter how they're feeling state. That sounds like you, reach out today. If you're an investor, you have cash on the side, you work a W-2 job and you don't want to leave that security, that W-2, but you want to own assets other than maybe the stock market and have a little bit more control, we'd love to have a conversation with you. See if there's a way for us to work together. If not, we might know someone for you as well. Reach out to me. My Instagram's realestatemike02. Shoot me a DM there and let's have a conversation. You never know where it could lead. All I'm saying is 2026, I think is going to be a good year for assets. The money supply is going up. U.S. interest rates are going down and the government's printing money. All of those things lead to rocket fuel, and that rocket fuel pushes every asset higher. Which side of it are you going to be on? You've missed 2020. If you missed 2008, you missed 2000 in 1990, you don't want to miss this one. I believe this is going to be a great opportunity with how much cash I believe is going to come into this market, and it will be endless opportunity. Love to know what you guys think of 2026 and where you think it's going to go. Now, if you're wondering what to do now that 26 is here and you don't know what to do, well, I think the issue is easy. You need to grow your income and park it in assets or business. Well, if you have income through your W-2, what do? You can lend that money to investors at a higher rate of return. You can partner with investors, have a limited partnership of that asset and watch its returns. I've seen several people get outpaced returns from the stock market and own a real estate that can give you tax benefits. Now, if you're someone who maybe has good income, doesn't want to leave your job, can't, there are other options. I've seen people who get 0% credit cards to the tunes of $50,000 to $300,000. You can then lend that out to trusted people and make money for free. There are options. You just have to see them. You have to be willing to take the pressure of what comes with that risk. There is risk, but there's also risk doing nothing. What side do you want to be on? Do you want to be the person who said they tried to get ahead and it didn't work out? Or do you want to be the person who never did anything and you never got ahead and you're stuck? You go through another boom cycle and you have nothing to show for it. The choice is yours. Now, if you're a person who makes good income, I'm talking the doctors, the business owners, and you're not in real estate, now's the time to partner. We'd love to have a conversation. I think putting cash in real estate will be very, very good over the long run. Now, the other opportunity for someone who doesn't really have any skills, maybe they're young. Now, it's time to put in the work, learn a skill that you can grow exponentially. For me, that's always been sales. For you, I'm not sure what that might look like, but sales, I believe, is a way that you could take your income from 30, 40 grand and double, even triple that. I've done it with 2 or 3 people. We'd love to have a conversation if you're an A player. And if you want to learn it yourself, there's plenty of people you can learn this online. It is a great opportunity and a way to shift the world. Love to have a conversation with you guys. My Instagram is realestatemike02. Don't be left behind in 2026. I'm not saying things are going to go up and to the right, but I'm saying you're going to see a gradually uptick, and I believe it will continue into 2027. Could be wrong, but we will find out. I'm putting it out there. What are your predictions for 2026?
Thank you for listening to the Properties for Profit podcast. I hope you found today's episode valuable. If you enjoy the show, please subscribe and share it with others who might benefit. Follow me on social media for more updates and tips. Until next time, keep turning properties into profits.